Gold price analysis September 15, 21, 2025. Current market snapshot as of September 14, 2025. Spot gold XAU USD is trading around $3,743 per ounce, marking a modest daily decline of about 0.3%, but still up over 8% month to date and 41% year to date. The metal has been in a strong uptrend driven by persistent inflation concerns, geopolitical tensions, and anticipation of Federal Reserve rate cuts. Recent highs above $3,600 reflect robust central bank buying and safe haven demand, though overbought technical indicators, e.g. RSI near 70, suggest potential for short-term pullbacks. Key economic events next week. Next week's calendar is dominated by the Federal Open Market Committee FOMC meeting on September 16th or 17th, with the interest rate decision and economic projections on Wednesday. Other U.S. data releases could influence sentiment, particularly around consumer spending and manufacturing. Here's a focused rundown of high-impact events, times in ET, forecast versus prior. Monday, September 15th, 12:30 p.m. NY Empire State Manufacturing Index, forecast 10 prior. 3 medium impact gauges, regional factory activity. Tuesday, September 16, 12:30 p.m. Retail sales, MOM, forecast 0.4%, prior 0.3%. High impact measures consumer spending, a key inflation driver, 12:30 p.m. Retail sales echoes, XAU autos, MOM, forecast 0.0%, prior 0.3%. High impact, 12:30 p.m. Import tours, export prices, MOM, forecasts 0.1%, 0.2%, priors 0.2%. NA, medium impact, signals inflationary trends, 1:15 p.m. Industrial production, MOM, forecast 0.2%, prior 0%. High impact, tracks factory output, 1:15 p.m. Capacity utilization, forecast 77.8%, prior 77.5%. Medium impact, 2:00 p.m. NHB housing market index, forecast 33, prior 32. Medium impact, home builder sentiment, FOMC day 1 closed session. Wednesday, September 17th, 12:30 p.m. housing starts, forecast 1.37 B, prior 1.420 AE. High impact reflects housing market health amid high rates. 12:30 p.m. building permits pre-all, forecast 1.37 meds, prior 1.362 meds. Medium impact. 2:00 p.m. FOMC interest rate decision, forecast 4.25%, prior 4.50%. Highest impact widely expected 25 basis point cut. 2:00 p.m. FOMC economic projections. Dot plot. Highest impact updated GDP, inflation, and rate forecasts. 2:30 p.m. Fed Chair Powell press conference, highest impact forward guidance on future cuts. Thursday, September 18th, 8:30 a.m. Initial jobless claims, weekly forecast at 230k, prior bulk 222125k est. High impact, labor market health, Tenala and Sioux Oaks AM, Philadelphia Fed Manufacturing Index, forecast on 10 prior EST, most medium impact. 10 EU-wide World AM, leading index forecast 0.2% or prior EST, low impact. Friday, September 19th, 8:30 a.m. S&P Global Flash Manufacturing PMI, September forecast number 49, prior estimates, high impact, early read on factory activity. 8:30 a.m. S&P Global Flash Services PMI, September forecast 9:55 prior CES. High impact, services sector pulse, 10 a.m. Existing home sales forecast, more 4.0 prior CES. Medium impact, non-U.S. notes, China's industrial production and retail sales, Monday 2 a.m. ET, could sway global risk sentiment as weak data might boost gold's safe haven appeal. Potential impacts on gold prices. Gold's inverse relationship with real yields and the US dollar makes next week's events pivotal. Lower rates weaken the dollar, reducing the opportunity cost of holding non-yielding gold and supporting prices. Pre-Fed data, Tue, stronger than expected retail sales or industrial production could signal economic resilience, tempering cut expectations, and pressuring gold toward $3,550 support. weaker prints, e.g. soft consumer spending, would reinforce dovish bets, pushing toward $3,700 resistance. FOMC decision to ED, a 25 BP cut is fully priced in. Fed funds futures imply around 95% probability. The real drivers will be the dot plot, fewer cuts in 2026, and Powell's tone. Dovish signals, e.g. data-dependent easing path could spark a rally to 3,150 plus. Hawkish surprises, e.g. sticky inflation concerns, might trigger a dip to $3,500. Volatility expected 2-3% swings post-announcement. Post-Fed, 2-3. Jobless claims and flash PMIs will test labor inflation narratives. Rising claims, 240K, or contracting PMIs 50 would amplify bullish gold momentum. Home sales data could highlight rate sensitivity in housing. Geopolitical risks, e.g. Middle East tensions or equity sell-offs could provide tailwinds, while a risk on rebound might cap gains. Weekly forecast, base case bullish bias. Gold trades in a 3600, 3250 range, closing the week higher, 3680, if the Fed delivers a dovish cut without hiking cut projections. Upside catalysts, soft 2 data plus accommodative Powell, downside risk, hot retail sales, Paulus. Hawkish dots, testing 3,550, bull scenario, dovish Fed pulse, weak PMIs break above 3,750, eyeing $3,800 year-end targets, bear scenario, resilient data, plus pause cuts, pull back to 3,500 with dollar rebound. Trade idea, long gold on dips below 3,620, targeting 3,700 with stops at 3,580. Monitor dollar index, DXY below 100 for confirmation. This analysis assumes no major black swans. Markets can shift rapidly on headlines.